Eyal Hertzog, self-descriptive again. He is one of the brains behind Bancor protocol. I mean, as he said yesterday, it's a hook basically because they raised $153 million only a few months back. So he will explain what is the real success story behind that and what would be the challenges. Thank you.
So, hello everyone. So how many of you heard about Bancor? Just, okay. And I have another question. How many of you participated in the crowd sale? No. And how many understand what Bancor does? That's the tricky part, yeah. Let me tell you a little bit about our process and how we came about to do this ICO. It was, for us, a very long road, essentially. I mean, we started getting into crypto in 2011. And it was when we discovered Bitcoin and got really excited about it and thought what we can do with it. And my personal background was that my previous company was a video sharing site called MetaCafe. And we were second to, I mean, we were leading the race in the beginning. But then another site you might have heard about, YouTube, they kind of flew to the moon. And that was a good question of why did that happen. And the answer for that was very interesting, is because 99% of the video views are in the long tail. And what is the long tail? I mean, if I ask any one of you what kind of video you like to watch online, I'm sure you will hear very different answers. Probably many of you watch blockchain-related videos, but that's because where we are right now. But that would not be true for the people on the street. So there's a very big variety of videos that people watch. And that's called the long tail, meaning that the hits are a very small percentage of the market. And when I saw Bitcoin for the first time, I remember what I didn't understand back in MetaCafe, and I thought to myself, okay, so this is a user-generated currency, which is an interesting idea, and no one even knows who generated it. So there's going to be more. There have to be more. I mean, if anyone can create a currency, we will see many more currencies in the future. Now, we were right, but we were like a few years too early to be right, which is also a challenge in this industry. And we've been working and doing different pilots, and we created a platform for user-generated currencies that is not even blockchain-based, only server-based, just to experiment how communities use currencies. Our first customer was a community, a Facebook community of moms. I'm talking about 2013 now. A Facebook community of moms. We created a currency for them called Hearts, and we let them trade products and services between themselves using that currency. It was very, very successful. We had with a 10,000 people community, we had 1,000 transactions per day at the peak, which was mind-blowing for us. However, we then started to notice that there is an issue in the community that caused very slow and gradual decline in the number of deals. We tried to understand what it is. We talked to a lot of community members. We also had other communities that used their own currencies. And we ended up figuring out that the main problem was illiquidity. I mean, the fact that those currencies, they were useful for their communities, just like a computer network is useful on its own. But when you connect all the computer networks together, you get the internet. This is 1,000,000 times more useful than a single computer network. And liquidity is essentially the same thing for currencies. I mean, every currency by itself can be useful, but if you connect all of them together, you create the financial network that we know. It allows you to move value from this group to that group, from this community to that community. That lets me use my credit card all over the world, even though I have only shekels in my account. So we realized this is important, and we thought to ourselves, okay, so how can we get liquidity? The only solution is exchanges. And guess what? Those are local currencies with like 10,000 users. There's not going to be any market makers. There's not going to be any activity that will enable liquidity. And I think it was 2014 that we started to think about this problem. And slowly, as we thought about different ideas to tackle that, we started to evolve the thinking of how to solve the liquidity problem in another way. And on 2016, when we started to dive into Ethereum and smart contracts, and we started to understand what you can do with smart contracts, this is where we began to build a solution that is today Bancor. And Bancor, just to summarize to you, it is, we heard about the fact that you need to talk to exchanges in order to make sure that you have liquidity for your token. Bancor actually solved that. Even if no exchange lists your coin is going to be liquid at all time. Not only that it's going to be liquid, you can adjust the liquidity. You can say, I want more liquidity or less liquidity, which is not an easy choice, because if you have too much liquidity, it means that the price will not go up as much as you like for an increased demand. So you have a lot of demand, the price will go slowly up. If you have too little liquidity, it means that when there is a sales pressure, the price will fall down too quickly. So you can adjust the liquidity. This is something that was unheard of before. And the third thing is that the liquidity is provided by the tokens themselves in what we like to call a built-in, non-profit, automated market maker. And it works beautifully with exchanges, thanks to arbitrage. It makes sure that the prices are always aligned. So Bancor solves a really, really big problem for this industry. However, it's not trivial for people to understand that. And that was our main challenge in the ICO, because we presented a whole new approach to liquidity. I mean, we've been working like that for hundreds of years. There's exchanges, we all saw those movies of people shouting, I'm buying for that, I'm selling for that. We kind of got used to think about liquidity in those terms. So when you have a different solution, which is only possible because we have programmable currencies that can hold assets today. We didn't have that before. Now we do. You can issue a currency which is programmable, it can hold assets. And that is providing the underlying, I would say, infrastructure to build a new kind of liquidity solution. And the biggest challenge was always to get people to understand that. Because very few people can actually understand what we do just from reading our white papers or visiting the website, because it's such a paradigm change. It's almost like Bitcoin. I mean, I don't know many people that heard about Bitcoin, read about it in some website, so, oh my God, this is the best thing ever. Never the case. I mean, with Bitcoin, it's always some kind of interactive process where you need to explain, you need to kind of show people that why is it different, what can you do with that you cannot do with another system. So as we discovered that we can do that, I think it was like late 2016, we discovered that there's a liquidity solution, and we started to hear about ICOs here and there. That was really in the beginning, and to research into that. And that was very confusing in the beginning, because we were like a company. We were a startup company. We actually had some fundraising, and we were starting to work on a platform. And we saw that this whole ICO thing is providing a different, I would say, upside sharing mechanism with the investors. We started to ask, okay, so you have shares on one hand, you have tokens on the other hand. How do those work together? What is the difference? That was very confusing in the beginning. And I think that what we learned is a very important insight and lesson that I've been sharing with a lot of people since our ICO. And that lesson is that when you're issuing a token, we're talking about a new paradigm in which you have to choose. You have to choose whether you are building a for-profit company, and there are not many tokens that are successful of for-profit companies. There will be, I'm sure. It's just in the beginning. It's just a promise at this point. But the other option is to build an online economy. An online economy is a completely different thing. It's not for profit. If you look at Ethereum, it's a non-profit foundation. It's the most successful ICO in history. Actually, it's so successful that it produces to its investors more value than all the money ever invested in all the ICOs times 10. It's a pretty successful ICO. But it is not a for-profit company. And that is really hard to make sense of. So what are we doing here? And after thinking about it more and more and talking to more and more people about it, I think that framework that we can explain it. And it goes like this. You know, every time that we took any tool, any technology, any instrument that we used as people, for example, publishing text. We used to do that with books and newspapers, but then when you have internet, blogs, website, it changes the entire paradigm. When anyone can publish, it changes journalism, it changes news, it changes our culture. When we're talking about broadcasting video, so as long as you have TVs, it's really hard to broadcast video. It's really hard to record yourself and get it to the rest of the world. But then when you have services like YouTube, all of a sudden everyone can do that. What does that do? It changes TV forever. It changes video. It changes our culture. My kids, they don't care about TV. They're watching other people playing games on YouTube. That's not what I did when I was a kid. But they're going to grow up different people because of technology, because anyone can broadcast video and talk and say funny things while he plays games, and apparently that's entertaining or something. So that's a big change. Now, one of the, I would say, most important technologies that we ever invented, there are two technologies. There's writing and there's money, currency, writing and currency. And why those two technologies are so important? Because if I put you guys in anywhere in the world, anywhere, if you have the currency and you speak the language, you know the language, you're fine. You can transfer information and you can transfer, we can say, energy to your peers. You'll be fine. But if you lack one of them, then you're going to be outcasted from the society. You're going to be rejected. You would not be able to blend in. So these are the two protocols we use to communicate between ourselves as human beings. This is how we work together. This is how we collaborate with people we don't know, with strangers. You know, if I know the language and I have the currency, you know, I don't need to know anyone. I'm going to just blend in. This is our standard. This is our TCP/IP and HTTP. This is our protocol, which makes it, you know, is a very, very fundamental invention. And if you think about it, this invention was, everyone was using it, like everyone was watching TV. But the question is, who can produce it? Who can issue it? And that changed only a few times in history. Think about it. I mean, at first we used commodity money, like gold, silver, salt, stuff like that. No one produces it, everyone uses it. You know, you can mine it, but you cannot produce it. Then we had kings and queens, which, this is like the whole coinage period. And they issued their own coin. This is the first time people, like rulers, has issued their own currency. Then we had banks after the printing press. So the power, if you think about it, it moved from kings to banks. The new rulers of the world, because they issue the currency. And that has been the case, you know, for the last few hundred years. And it's only changed now. Now we are, in the first time in history, at the point where anyone can issue a currency. Not just issue a currency, issue a digital, secure, transferable, privately owned, no intermediary needed, decentralized, which with whatever level of control you want to have over that currency, that can be programmable and can even hold assets. And anyone can do that for a cost of $1. I don't know how much the transaction fee to deploy a contract, but it's not much. And that's happening today. So that's a huge shift. And we're starting to understand what are the implications. Now I have to tell you, I thought for a while, this is why we started this experiment in 2013. We thought, yeah, you know, people can issue currencies for communities, but that was not how it unfolded. What happened is that people issued currencies for businesses, for ventures, if you will, and that started to explode. But as I say, reality is stranger than fiction, and because of this new ability to issue currency, what we're seeing now is that it is possible to create an online economy. Now, online economy is something that it means it's like a higher hierarchical level than a corporation. So I like, you know, to give you a visualization. You know, if I'm an individual and I make money, I'm for profit, I work, and I want to scale up. I can become a corporation. If I'm a corporation, now I'm I'm the founder of some company. I have a group of individuals. We all work for the same goal in collaboration, and now we can do more, right? Now, if the corporation want to scale up, it can scale up to become an online economy. Online economy is essentially a group of many corporations, of many for-profit entities and consumers that all work together using the same currency. What examples do we have? We have Bitcoin, is an online economy for a private, permissionless, decentralized currency. And that's what it is. It's a very basic thing. And it's obviously useful for things that are, you know, not permitted. It's so much better, and it's so much better for things that better kept private. And that has given, you know, kind of a, not the best name, not the best brand for Bitcoin. But then Ethereum came, and Ethereum created essentially an online economy for venture funding. That's what it is. I mean, the killer app right now with Ethereum is a venture funding, which is a big deal because it's one of the three ways that people use money. If you think about it, people use money for commerce, which is a form of cooperation. They use money for lending, which is a form of, you know, transferring the wealth, renting money, I like to call it, for interest. And it's venture funding. Venture funding is when I tell someone, hey, I believe that you can create value, and I want to fund your project, and I want to be part of the upside, which is a different type of transaction. And it's a very important type of transaction because this is how the world moves forward. Almost every innovation that we use today has been created through the process of a venture funding transactions. Those recipients of venture funding are essentially, they're a very special group in the society. Those are entrepreneurs. Those are the leaders, the people that have no boss, but they are the bosses of other people. So it's a very specific, small, but critical part of our economy, venture funding. And Ethereum created an online economy which works so much better than the existing solution that now we're seeing venture funding growing up by like, 400% relative to what it was. So it's almost like, if YouTube releasing and people watching like four times as much videos. Because it's out, because the technology is available. And this is what we're seeing. And that's a true revolution. People ask me, when will currency, cryptocurrency will become mainstream? I'm saying it's already mainstream, just on specific use of money. And it's going to go to the rest. And the reason, by the way, that it was successful with venture funding, other than other solution, is because it is not as sensitive to volatility. If you think about it, commerce is very sensitive to volatility. Price volatility is not good when you're doing commerce. With you need a currency for commerce. Price volatility is not good if you're doing lending. You don't want to have to return a loan on a different, in a currency which is volatile. But if you're doing venture financing, usually those are big numbers that's supposed to last for many years. Volatility is not so bad. It's actually good if the general trend of the volatility is upward. So it works, and it's successful. And it's important to say that this model where you create this, and those founders of Ethereum, an investor of Ethereum, did like 100,000% on their investor, which is ridiculous. But they created a non-profit economy because economies should be non-profit. If an economy is for-profit, there is a big problem. I'll give you an example. Think about all the ecosystem around Facebook and around Twitter. So many problems there. So many clashes between the developers, between the independent companies and the central corporation in the middle of the ecosystem. And the reason is very obvious. It's because if an economy or ecosystem of businesses is controlled by a central entity, then the central entity, which is for-profit, we just look to how they can get those margins to itself. How can they make more money through that ecosystem? We see that again and again and again. But when you're creating a non-profit economy, there is no for-profit entity in the middle. So Ethereum, again, is a non-profit foundation, and that's critical, that's key. And that's encourage people to join this economy. So the first thing I say to anyone that's thinking about ICO, I tell him, look, you need to realize and think about, are you creating a for-profit entity, a for-profit business, or are you trying to create an online economy? Because the most successful examples for cryptocurrencies are online economies. This Bitcoin and Ethereum, the most successful. And again, I'm not saying, I think that a for-profit company is going to benefit a lot from a currency. If you think about it, every for-profit company in the world can go tomorrow, say, I want to do an ICO, put it on their website and say there's only one term in the ICO. And the single term is that whoever pay me for my product and services with my currency is getting 10% discount. That's it. Done. Just by doing that, they created an economy of their users. It's not a non-profit economy, but it's like a club of their users. And their users will prefer to use that currency because they will get a discount. So the value of the currency will grow up, will rise as more and more people realize that and start to using that. And that would create for them something that I can describe as a loyalty point, store credit, and equity in the same instrument. That's a very, very simple solution that could work for many different companies. I know that today, my favorite coffee chain in Israel, I can buy their own currency, and I get 10% discount when I pay at the coffee shop. Now, obviously, this is pegged to the Israeli shekels because, it would not be liquid in any exchanges. But in the world where you have liquidity and you have price discovery, this can actually act, have independent value. So I'm not saying that you cannot create tokens for profit, but it's really critical to understand the dynamics of online economy, to understand the dynamics of creating a framework in which other entities can collaborate, can work together, and perform a task. Because when you do that, you create something that I think challenge the very idea of enterprises itself. The very idea, because I've been an entrepreneur for 20 years, and for me it was always scary that what will happen if I succeed in building a big companies? You know why it was scary? Because I hate big companies. It's like the most awful thing in the world. It's like full of politics, and and no one knows everyone, and everyone. It's like they lose their creativity. Look at that. Big companies, they cannot be creative. They create nothing. They only buy startups, and they buy the startup. As soon as they buy it, they ruin it. If you ever use Skype lately, it's like there's something so uncreative and so uninspiring in big companies. And I think it has to do with the fact that the interests of the individual working on the big company are very far from the interests of the corporation itself. Well, in a small company, you don't have that. And you know everyone, and everyone is like around the same goal, and they work together. But when I work in the big company, if I'm going to do something right, I'm going to add 0.1% to the profit. But what about my career? What about my promotion? I want to get credit for what I do. I need to think about myself, right? What about 0.1% of the sales in my corporation? That creates a problem. So I was always worried about that. But what we're seeing with online economy, again, look at Ethereum. It behaves like a big company, with the only difference that it's many different companies, and they all work with each other, and they help each other. Why? Because they're all going to benefit if the economy grows. So you have an interest to work together. You're sharing the same faith by using the same currency. It's just like a country that uses the same currency, and if the country is doing great, then everyone's doing great, and the economy is doing great, and you have more exports, and people like your products, and that's we've seen that happening a lot. But setting up a country is a little bit more challenging. But setting up an online economy is something that can be done. So understanding this dynamic, and by the way, when I'm saying non-profit economy, it doesn't mean that you cannot make money of it. I mean, Vitalik, I don't know how much he sold, but if he didn't sell, he would make something in like $300 million, right? That's not bad. So you have an upside for the investor, you have an upside for the entrepreneur to create the non-profit online economy. But it's important to remember that this characteristic that says, look, we're not trying to build a business around these currencies. We're trying to build a framework for collaboration, is a framework which invites many more others to join you. Because I would never build my business around another business. Because if I build my business around another like building your business around Twitter API, I actually know some people in Israel that did that and regret that to this day. Because you're subjecting yourself to them. But when you're working on an equal basis, that's a very different perspective. So when we understood that we're not setting up a for-profit company, maybe I should correct that. We are setting up a for-profit company, but it has nothing to do with a token. Yes, we have a for-profit company which builds technology and solution like many other software companies. But what we're doing is actually creating a new online economy around liquidity, which is the Bancor network. It's a non-profit economy, and the solution, if Ethereum is coming to solve the problem of venture financing, doing a great job on that. I mean, it comes to solve the problem much bigger, smart contracts, it's a whole legal framework. But in practice, the killer app is venture financing. So what we are building is an online economy that solves the issue of liquidity. And the liquidity is a big problem, especially in this room. I'm sure many people understand that. So a solution for this problem is valuable. And as more people use that economy, join that economy, use the network, the more it grows, the more it benefits the investors, the entrepreneurs, and the early adopters. So it's all, they all have an upside in it, and they have a reason to collaborate with each other. So if there's one kind of thing that I think it's critical to understand when you're going to this route is that it's not like it was before. Now entrepreneurs have a choice. They can set up this kind of venture or that kind of venture. And the hint of how to choose which one you want to create is by how much you want other businesses to take part in what you do. Not just to use what you're doing to get something done, but to be part of it. Like, we saw the presentation, but by Token Market. Token Market is a great example for a for-profit entity taking part in the Ethereum ecosystem. So how much you want of that in what you are creating, and that will give kind of a clue of how you should think about it. In terms of taking it to the next level and really issuing a token that people will use, I would stress that there's nothing more important. There's nothing more important than sitting and in as many conferences you can with as many potential investors or users or collaborators as you can, and sharing what you're doing, getting the feedback, getting the word out. I think that for us, it really built our offering. It really built our marketing. This process in which you you share your concept, you get feedback, you learn how to talk about it, you learn how to explain it, is the most important process for us at this point. And it's much more important than it used to be before when we raised money from VCs. Because guess what? I have 11,000 investors. 11, I never had. The biggest round I ever did, and I've been an entrepreneur for 20 years, it was like 3. That was the biggest number of investors in a single round. This is like 11,000. So it's very different. It's very different in terms that you need to find the right message, the right words, the right language to speak to many more people. Because if you work with a single or 2 VCs, then you can get them to understand because you have enough time with them until they get what you're doing. They can get excited or not, but how you package it is less important. But in this market, in this space, because it's open, because you address so many people, this is key. The key is to be able to deliver your message. I hate to make that comparison, but like a politician, that needs to address as many people as possible. So you don't be a politician, but be able to speak in terms that many other people can understand you. It's very different. I mean, for seasoned entrepreneurs, it's very different than what we used to have, and it's much more demanding. But I would say it's also much more rewarding, at least in our case. So with this, I'll be happy to answer any question you might have. Thank you.
Well, perhaps I can start. It's quite interesting that you draw a line between conventional wisdom of venture financing as well as this whole new ICO framework. It's also quite interesting that you touched upon this investor relations thing because, again, I mean, for example, for the public companies listed on Tel Aviv Stock Exchange, I don't know how many investors for a regular public company, they have, but I don't think it's around 11,000. So you have too many. So how do you do that? But more importantly, I mean, so do you think that this is going to sort of change the entire spectrum of financing businesses? I mean, are we really discussing about a disruption for the VCs?
So yes, I do think it will change. I don't think that VCs, VCs are like journalists. They see a new technology. I mean, they used to write in newspapers, so it was a closed club. But then the internet, so the journalist is like, oh, now I can start my own blog, right? So they still have the capacity of being able to evaluate teams and ideas and concepts and think abstractly on those things. So that is valuable in this market, just as it was in the before. But it's not a closed club anymore. So obviously, that's a huge disruption. The reason I have 11,000 because, again, this new technology of fundraising is so much better than the existing solution. It's like a million times better. It's like comparing the web to printing press. It's not a fair comparison. It's not a fair competition. You're talking about technology from 600 years ago, and you try to compare it to like the bleeding edge of like communication and trust and proof. Based technology that we have today, that it took us so many years to figure out that we can even do that. That's not a fair comparison. So obviously, this is a much better solution, and the fact that you can, with no intermediary, you can get funds from anywhere on the planet. It's just mind-blowing. I mean, again, for me as an entrepreneur, it's almost unbelievable. So it's gonna disrupt it completely. But what I'm saying is that we're talking about much deeper disruption, because if you think about it, computers is a thinking machine. That's a big revolution, the personal computer. And there are two technologies that are complementary to computers that are critical for them. One is the network, letting computers send information to each other. And the other technology that is critical is database. Database let computers share some set of information that they can all work with. Those two technologies changed our entire infrastructure all over the world. And guess what? the first decentralized network, again, not controlled by any monopoly, not controlled by a single business or government, the first decentralized network changed everything in our life. I mean, we cannot believe how much it changed our life. We all have like those devices connecting us to anyone else in the planet 24/7. I mean, think about it. There probably should be a point in any civilization timeline that you can say, this is where they got connected to each other 24/7, you know? And we just passed that. So that's a big milestone. But then you have this other technology of database that lets many share the same data and collaborate around it. And blockchain is essentially the first decentralized database, meaning that it's not controlled by a single entity and a single corporation or a single for-profit, not by Facebook, not by Google, or not by your governments. It's yours. It's a database owned by its own users. It's just like, so you're talking about disruption. You know, we used to rely all our communication on the government. The phone company, the post office, the TV even was the government. Communication was done by the government. What communication does the government need to do today? Nothing. Who needs them for communication? We have the internet. So what do they do today? They run the databases. I mean, the ledger on your bank is a database. It's a very important database. The registry of citizens, the registry of land, the registry of deals, of courts, of whatever. It's all databases. And we need the government as a central entity to manage our common database. At least we needed them. We don't need them anymore. We can do it on our own. Is that a disruption? Oh, yeah. That's a very big disruption. And the fact that you can do today decentralized Facebook. You don't need Facebook to control the database. You can create the database in a decentralized way, and then if I have access to Facebook database, read and write access, I'm Facebook. Zuckerberg is not more Facebook than I am. We have the same access. So now you can create a decentralized Facebook with many different interfaces, with many different revenue models, and then with many different ways to kind of prioritize your news feeds. That was not possible before we had decentralized database. So I don't think just it's disruptive. I mean, that's almost like too little of a word. I think we're talking about something so fundamental here that would make, you know, just like the internet made the personal computer revolution look small, I believe this would make the internet revolution look pretty tiny, because it have much more implication on our daily lives, on the way we collaborate with each other, not just the way we communicate with each other, but how we collaborate. How we communicate, in fact, you know, that affects our conscious, our awareness, our knowledge. But how we collaborate, that affects this building. This building is a collaboration between people. That's much bigger, much more profound. So.
Absolutely. Yes, please.
Hi.
Hi.
Thank you for the presentation, by the way. How does Bancor protocol works briefly, actually? Technical answer would be fine.
Briefly, what it does is we have this concept of smart token. A smart token is just like any other token. It's ERC20 compatible, but it has what we call connectors. So it can connect to other tokens. It actually creates a network after the token, because tokens actually are aware of each other. So for example, our own token, BNT, has a connector to Ether. And it has a connector, and the connector holds balance of Ether. And because the connector holds balance of Ether, it means that anyone that holds BNT can liquidate the BNT to Ether just by sending the BNT to the smart token and getting Ether in return. When you do that, the price will go down of the token.
You actually liquidate the Bancor, right? Okay, I understand.
What I'm saying is that it's a model where in order to purchase or liquidate the token, you do that with the token itself. You don't need to find another buyer seller in exchange that you need to be matched with. I mean, today exchanges are doing matchmaking between buyer and seller. With Bancor protocol, it doesn't work this way. It works that you want to buy a token, you buy it from the token. You want to sell a token, you sell it to the token. Whenever you do that, the price changes.
But only through BNT, right?
Not only through BNT. You can do that with any token. I mean, essentially what Bancor is a code you put in your smart contract.
Okay.
And then if you put that code and you deposit any token, you have guaranteed liquidity at all time. we are building BNT as the center of what we call the liquidity network, because every token we talked to, we said, okay, you connect to BNT, and BNT have a strong connection to Ether. So through BNT, you can get to Ether, but you can get to any other token. And we're building BNT to be cross-blockchain, so you'll be able to move to convert it to other blockchain. Essentially, making a network that would allow anyone to convert from any token to any token within maximum of 2 hops, and that would reduce the cost. And so you can think about it as if the liquidity is provided, again, by non-profit market makers. So you get better prices. Because no one, to use an analogy, if exchanges are like cars, and the market makers are like the for-profit Uber drivers, and the market takers are like the passenger getting the service, then Bancor is a self-driving car technology. It's a very simple concept, but it has profound implications to much of this industry, because it allows to do in an automatic, by computer, something that required human to do before. And that changes a lot of the dynamics.
Thank you.
So, any other question? Can I afford one last question before you leave? Yeah. So far what we have seen in the ICO market is mostly startups. Some of them are with brilliant products and going for multi-million-dollar token financing, token sales. So we haven't seen big, mature firms so far.
No, I actually have. I think that we're going to see more and more of them.
That's my question, basically.
I think that we're going to see more and more of them. As more big firms realize that they can scale up their business to become an economy. Mm-hmm. Scale up, and when you create an economy and you're the first or the biggest for-profit entity in that economy, that's a huge advantage. It's like to be the founder of a corporation, right? Yes, you're just one of the employees, but you're the one starting it all. So you have a special position, you have more tokens or shares than the other ones, and you're obviously well advanced in your thinking and understanding of the space. It's just like a consensus for Ethereum, if you think about it. That's the for-profit entity in the non-profit economy. So I see a lot of businesses that kind of realize that and scaling themselves up. And I believe that we will see many, many more. It's just, by its nature, small startups and independent entrepreneurs are like much quicker to be able to make the decision, to realize, to understand. Big organization, they move slower, but I do see that happening. So expect that soon.
Well, thank you very much, Eyal. It was great.